Chali. So, which was the last question that we did? Can you tell me the last question that we attempted? Was this? No. What was the last question that we did, guys? You have to tell me because the questions are not written now.
Question number 13.
13 we did. Okay. Question number 13, page number 373. 373, question number 13. Usme, you guys have any confusion? We did it really fast. So I want to ask if you have any confusion in that. Did you understand? Did you follow that question? Everyone? Okay, so 10th question we did. Yes, we did question number 10 also. And after that we did 13. Today first we are going to do question number 14. 14 is a full-fledged question where we have material variance, labor variance, variable overhead and fixed overhead variance also. Generally questions of this type come in your exam. So that's why we will do that question first. SP Limited produces a product Tempex which is sold in a 10 kg packet. The standard cost card per packet of Tempex is as follows. Page number 374. Direct material 10 kgs at 45. Direct labor 8 kgs at 50. Variable overhead 8 hours at rupees 50 per hour. Fixed overhead 200. This is the standard rates which are given to you. Budgeted output for the quarter is 10,000 kgs. That means how many packets? How many packets? How many packets? 10,000. Each packet is of 10 kg. 1,000 packets, yes or no? Correct? बोलो यार. 1,000 packets? Okay. Actual output is 9,000 kgs. That means 900 packets. Actual cost for this quarter is as under. They have given you similarly the actual cost also. You have to calculate material cost, price, usage, labor cost, rate, labor efficiency, then variable overhead cost variance and fixed overhead cost variance. So we first start with the variable overhead variances. So we'll make the table working note 1. Statement showing, or now that you are pro, you don't need the table also. You don't need the table. You have now understood the formulas and this is a straight away question. So we are straight away going to start answering. Material cost variance. What is the formula, Divakar? Total actual cost. Now, standard cost you need for 10,000 kgs or for 9,000 kgs? You need for 10,000 kgs or for 9,000 kgs? Okay, we'll make the table. So, working note 1. Statement showing details for material variances. So, we have standard, quantity, rate, amount. Actual, quantity, rate, and amount. Lastly, standard for actual output, quantity, rate, and the amount. Okay. Standard. Divakar, what is the standard given to you? 10 kgs, right? At what rate? 45. Total 450. This is for how many kgs? 10 kgs. Yes or no? This is for one packet. One packet is of 10 kgs. Actual, what is the quantity? 8,900. Yes or no? See the last table, right? One second. Yes, 8,900. At what rate? At 46 rupees. So that is equal to 4,09,000. 4,09,000. 4,09,400. This is for 9,000 kgs. Okay, coming to standard for actual output. Standard for actual output is, now you need standard for actual for 9,000 kgs. Divakar, why did you say 10,000 that time? Got it? Yeah, so that would be 9,000 kgs at 45. That is equal to 4,05,000. Fatafat give me MCV, MPV, and MUV with the formulas. Don't forget to write the formulas. 4,400 adverse. Write with the formulas, please. $8,900 adverse. Hamsa, Tripti, who all are there in the class? Everyone, please reply quickly. Divakar is not only supposed to answer. 8,900 adverse. Hmm. Material usage variance 4,500 favorable. Everyone got this? Anyone still doing? Clear? Chalo, working note 2. Labor. Again, same thing, standard, hours, rate, amount. Hours, rate, amount. Actual. and standard for actual output. Hours, rate. I hope you guys have written the formulas also. Don't forget to write the formulas. Yes, hours. 8 hours at Divakar, 50 rupees. So that is equal to 400. Actual hours? Hmm. 3,64,000. This is for 9,000 kgs. So the standard for actual for 9,000 hours, the standard would be 9,000 divided by 10 into 8. That is 7,200 hours at rate 50. So what is the amount? 3,60,000. Quickly, labor cost variance, labor rate variance, and labor efficiency variance. This I know this would be 4,000 adverse. Quickly, Hamsa, Tripti, Abhishek, everyone. 14. 14,000 adverse. कितना है 10,000 favorable. Chalo, next. Variable overhead. Have they asked us for all the three variances? Or only one variance? Why do you want to spend so much time making the table in this? Cost variance is equal to total budgeted cost minus total actual cost. Actual cost is given to us. कितना है? 72,500. Total budgeted cost. Total budgeted cost for the actual. Now, this, if you see here, variable overhead 8 hours at 10 rupees. Agreed? So that means variable overhead is varying on the basis of hours. Yes or no? Is varying on the basis of hours. How many actual, what is the standard hours? 7,200. So 7,000. If you would have made a table of, चलो ठीक है, आप बोलोगे कि नहीं मैम मेरे को वेरिएबल ओवरहेड का टेबल बनाना है. Okay, I'm just showing you how you would have made it. No need to make it. 8 hours at 10 rupees. 80 rupees. ठीक है? This would still be 7,000 hours. Total 72,500. You would have got a rate. And here again you would have calculated it. You would have got 7,200 into 10. 72,000. Agreed? So can I directly do 7,200 hours into the budgeted rate or the standard rate of 10? So 72,000 minus 72,500. 500 adverse. Anyone who has not understood this can ask me. Bolo, done, everyone? Next. Fixed overhead cost variance. Formula बताओ. Sorry? Right. Fixed overhead cost variance is equal to absorbed overheads minus actual overheads. Is the actual overhead given to you? How much? 1,92,000. Is the absorbed overheads given to you? No. You need to calculate the absorption rate. What is the absorption rate per packet? What is the absorption rate per packet? Rupees 200 per packet is the absorption rate. Absolutely right. How many packets did we make? 900. So 200 into 900 packets. That is 1,80,000 minus 1,92,000. 12,000 adverse. Anyone who has not understood this? Bolo. Anyone not understanding this? Clear? Can we go to the next question now? So this is the solution for question number 14. Chalo, let's go ahead. Today we are going to do sale variances also. Very easy, in fact, easier than these cost variances. The table is already given to me. I am first going to calculate under total approach. There are two approaches to this. So here first we are going to do sale variances using total approach. There won't be any अच्छा चलो देखते हैं. पहले मुझे बनाने तो budget. For budget we have quantity, then we have selling price, and we have the total amount. We have product A and we have product B. Product A 2160 and product B 1440. Total बताओ 35, 3600. 12 and 5. So that is how much is this? 25,920 and 7,200. Total Madi. 33,120. What should I write as the output here? They have not told us anything, any output. What should I write as the output here? Anyone? Isn't the quantity is our वो जो quantity में whatever we have written, isn't that output itself? Right? So there won't be any output. Cost will have output. But sales is sales. Whatever is sold is sold. You are not going to have sales for this, that, nothing. How much ever you sell, it is good for you. There won't be any output there. Yes? No output. This only is the output. You are not going to compare it. You are not going to have the standard for actual output or nothing like that. Now actuals. So you were planning to have a sale of 2160 and 1440, but you actually had a sale of 2240 and 960. Total 3200. Selling price of 11 and 6. So amount being 640. 5,760. Total 30,400. Should I make one standard for actual? Should I make one standard for actual? Yes or no? What are you going to make the standard for actual? What is the actual? What is there any output which is given to you? Very simple. Budgeted quantity. You were planning to sell 2160. You sold 2240. Very simple. Right? So there won't be a third part of the column. There will be only this much in sale variances. First variance. Total sales variance. Please excuse me. बोलो जल्दी बोलो जल्दी बोलो ये ऊपर वाला ड्रेस ना वहीं पे बेटा नहीं मिल रहा ये धोने में दे दिया ये इसका ऊपर वाला धुल गया दूसरा पहन ले और कोई ड्रेस नहीं मिल रहा मुझे पहनने अरियंत इसको दो ना ड्रेस yes total sale variances now tell me Divakar, you were planning to sell this much, you sold this much. Good or bad? Bad. That means you should have a negative variance. 30,400 minus 33,120. That is equal to 2,720 Edwards. What is 30,400? Actual sales minus the budgeted sales. Here it is opposite. Correct? Why? Because cost lesser is better, sales more is better. It is opposite. Next, total sales price variance. Can you tell me the formula now? Can you tell me the formula, please? Yeah, which price should I take first? Actual first or standard first? Very good. So first we are going to take the actuals first. That means actual selling price minus budgeted selling price into actual quantity. So that would be 11 minus 12. I was supposed to sell it for 12, but I sold it for 11. Bad for me. Into 2240. 2240 adverse. Similarly, I was supposed to sell it for 5. I sold it for 6. Good for me. Into 960. That is equal to 960 favorable. Overall, I have clear. Next variance. Third variance. Total sales volume variance. Formula. Actual quantity sold minus budgeted quantity into budgeted selling price. Correct? Same formula. So that is equal to for A and for B. A would be I was supposed to sell 2160, I sold 2240 into budgeted selling price of 12 rupees. That is equal to what? 960 favorable. Similarly, for B, I was supposed to sell 1440, I sold 960. Bad for me. Into 12, 12, and this 5. 2400 adverse. 1440 adverse. Next, revised standard quantity. If I sell 3600, 2160 should be A. So if I sell 3200, how many units of A I should have sold? 19, 19, 20 units. Next, B. If 3600 units are sold, 1440 units will be for B. So if 3200, how many should have been for B? 1280 units. Total comes as 3200 units. Clear? Now, obviously we are going to use this detail to calculate what? Total sales mix variance. So what will be the formula for that? actual quantity sold minus revised standard quantity into budgeted rate. Actual quantity sold is 2240, revised 1920. So we sold more than what we budgeted into 12. 40. Anybody not understanding anything, you should ask me immediately. I sold 960, I should have sold 1280. Bad. How much? 1600. 1600 adverse. So overall we have 2240 favorable. Excuse me for a minute. सूप और पनीर में वो फिलिंग करके सैंडविच अब क्या पूछ रहे वो पंगन रोटा पंगन का इतो काम डन clear okay so coming to the last variance nahi will there be a yield variance what do you mean by yield आउटपुट ये तो खुद ही आउटपुट में डिफरेंस है दिस इज द डिफरेंस इन द आउटपुट yield will be from some input you are getting output and that output is not as per the plan that is why that in a yield ratio will be there here it is output itself so there won't be any yield variance and you will have one check that will be equal to your one check will be total sales variance is equal to price variance plus volume variance that is equal to 1280 adverse and 1440 adverse that becomes 2720 adverse. Are we clear? Everyone, Tripti, Hamsa, Sufia, Roshit, Abhishek. Sure? Clear everyone? Others? Okay, let's go ahead then. Next would be B. Sale variances under under margin approach. Again the same table, budget. You will say, ma'am, can I use the same table? No. Quantity, margin, and the amount for A and for B. 2160, 1440. That is 3600. Can you tell me what is the margin? Yeah, so 12 minus, that is 3, and 5 minus 3, that is 2. Multiply. 2880, add. Actual quantity, actual margin, and the amount. Actual quantity is 2240 and 960. Total 3200. What is actual margin? No, it's not 11 minus 8. It is 11 actual selling price. Actual margin is equal to actual selling price minus budgeted cost. That is 11 minus 9, 2. And yes, 6 minus 3, that is 3. First tell me the answer, then I'll tell you. 27, 28, 80. Total. Hmm. Now, first, I want you to get an opportunity to think, why is it minus budgeted cost? Socho? No idea. Should I tell? Okay. What variance are you trying to find out? You are trying to find out sale variance. What do you mean by sale variance? That means you want to know what is the difference in the cost only and only because of the difference in the sales, not because of the difference in the cost. For cost variations, you have already considered in material cost, labor cost, variable overhead and fixed overhead. Here, you want to know specifically why there is a difference, and that difference is what is the difference only and only because of change in the sales. When you want the variation only because of sales, your cost has to be constant in both the places. Yes or no? If you change the cost there, what is the cost? 8 rupees. 11 minus 8. 11 minus 8. 3 rupees. 3 rupees you have made your actual margin. That means there is no variation. But you will get some cost variance. Cost variance will be there now. Let us assume that this cost, the cost column, 9 rupees and 8 rupees is only material cost. When you are finding out the variations due to material, you will write down the budgeted cost or the standard cost as rupees 9 and actual cost as rupees 8. Yes or no? So you are already finding out the difference between 9 and 8 in your cost variances. Yes or no? So that means if that variation you are finding in the cost budget cost variations or cost variances, here you have to make it constant. Clear? Am I making sense? Have you understood what is the reason why we are taking budgeted cost there? Everyone, this is important. Clear? Chalo. So that means actual cost is 7360 and the budgeted cost is 9360. That is equal to budgeted margin. Actual margin, sorry, actual margin. रुको अच्छे से लिखते हैं. Actual margin. अरे 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 sorry, this was actual margin का formula. I thought I've already written the cost variance. Sorry, total variance. Actual selling price minus actual cost. That is your formula. Now coming to the first variance. Sales margin variance. The overall sales margin. That is equal to actual sales margin. That is total actual margin minus total budgeted margin. That is equal to 7360 minus 9360. That is equal to 2000 adverse. Next variance. Sales margin price variance. That is your actual margin minus budgeted margin into actual quantity. 2 minus 3 into 2240. Second one, 3 minus 2 into 960. That is equal to 960 favorable. 1280 adverse. Go and check your total sales price variance. Same answer. Why? Simple maths. Both the places you are deducting the same amount, same cost. 11 minus 9 and 12 also minus 9. So the difference will be only because of the difference will be same. Yes or no? Correct? So your price variance under both will be same. C. Sales margin volume variance is same again, actual volume or actual quantity minus budgeted quantity into budgeted margin. Please write down the whole thing. Don't write shortcuts like me. So that is equal to, for A, it is actual quantity 2240 minus budgeted quantity 2160 into budgeted margin 3 rupees. Next, 960 minus 1440 into 2. 960 adverse. Last variance, sales mix variance. Do I again need to calculate the revised standard quantity? Sales margin mix variance. Do I again need to calculate the revised standard quantity? The calculation would be same, yes or no? For 3600, 2160. So for 3200, how much? You will get the same answer. I have not changed the quantities under both the approaches. I have changed the margin, right? And mix, when we calculate revised standard quantity, we calculate it on the margin, on the quantity. So it won't change. A and B. Sorry, formula. Actual quantity minus revised standard quantity into the budgeted margin. So here we have 2240 minus revised standard quantity is 1920 into budgeted margin of 3 rupees and 960 minus 1440 into 2. नहीं 1440 नहीं कितना है 1280. Can you please give me the answers for both? कोमल क्लास में हूँ, क्लास में। ठीक है, कॉल यू बैक। हाँ, बताओ कितना हुआ आंसर्स? 960 फेवरेबल, 640 एडवर्स। Same check again. Sales margin variance is equal to price plus volume. That would be equal to 1280 adverse plus 720 adverse. That is equal to 2000 adverse. Bolo, clear? Anyone, any doubt? Are we completely clear with this? Yes, nobody is replying. Yes, should we start? We are doing question number 17 now, which is on page number 378. SB Construction Limited has entered into a big contract at an agreed price of 1 crore 50 lakhs, subject to an escalation clause. Did I teach you escalation clause? Don't remember? Yes, class, did I teach you escalation clause? Yes, no. Whether I have taught you or I did not teach you, here I am going to teach you again. For material and labor as spent out on the contract, and the corresponding actuals are as follows. First question to all of you. They have given you 4 materials and 2 labor costs. They have given the standard quantity, standard rate, actual quantity and actual rate. But nowhere they have told us the output. How will we calculate the standard for actual output in this question? How are we going to calculate the standard for actual output in this question? No idea? Okay, let me tell you. We are talking about one contract. One contract's standard cost was this. One contract's actual cost is this. Do you want standard for actual output for this? For making one building, standard cost was this. For making the same building, actual cost is this. Do you want standard for actual for this? अभी तक नहीं समझ में आया? Didn't understand? Did you understand? Yes, no. I have given you a contract to make a building. Okay. The standard cost set by you for the building, for that one building is this, A, B, C, D, L1, L2. For the same one building, your actual cost is this, L1, L2, everything. Isn't the output one contract and one contract? So do you need actual for standard? Standard for actual? No need. Clear? Everyone clear? That means this is the standard that we require and this is the actual we require. Give your analysis on the admissible escalation claim and determine the final contract price. Prepare the contract account if all expenses other than material and labor relating to the contract are 13,45,000. Chalo, let us talk about this escalation clause. Escalation clause. What is escalation clause? This is a clause in your contract which says that in case you are okay, in case there is an increase in the price of the material or labor up to a certain percentage, write down, then I will again explain it. Escalation clause. What is escalation clause? Escalation clause in the contract says, escalation clause in the contract says that in case there is a that in case there is an increase in the price, in case there is increase in the price of inputs, inputs include everything, your material, labor, any kind of input that you are doing. In case there is an increase in the price of inputs, in case there is an increase in the price of inputs up to a certain level, up to a certain level, shall be reimbursed by the contractee, shall be reimbursed by the contractee. Full stop. However, however, if there is an increase in the quantities or hours, however, if there is an increase in the quantities or hours, the same will not be reimbursed. That will not be reimbursed. That will not be reimbursed. That will not be reimbursed. Because wrong estimation because wrong estimation of quantity, wrong estimation of quantity or wrong estimation of quantity or hours is not expected, is not expected from the contractor. Am I clear? Am I clear, everyone? Did you understand what I said? In case there is an increase in the price, that is not in your control. That is market generated. So that is okay. But in case there is an increase in the quantity or hours, that will not be reimbursed at any cost. Why? Because you are not expected to do that. You are expected to, you are a specialized in this area. You are an expert in this area. You cannot make wrong estimation of hours as well as of quantity. Clear? So now what will be the escalation claim? Calculation of escalation claim and final contract price. Now we have, you can make a small column, small table, particulars, computation, and the amount. Guys, by the way, this question was there in my paper, and this is the question which I did not get. The last part I could not verify it. That's why it means it is such a simple question. You will say, ma'am, you are stuck. You were stuck in such simple question. Yes, can't help it. So that's why I tell you that if you're stuck, and for 1.5 hours I was thinking why I am not able to do such a simple question. I messed up with the zeros somewhere. If you see, oh, there should be RTP comma May 10. The same question came in May 2010 paper also. That was my paper. Materials. We have A. Now, can you tell me what will be the escalation claim in that case? What is the change in the price? Is it 1100 minus 1000? Yes or no? It's 11,000 into 1100 minus 1000 is the change in the price. Into what quantity should I take? Into what quantity should I take? Standard quantity. Very good. Why? Because they are not going to pay us for the actual quantity. Right? Into 3000. That would be 3 lakh rupees. Did you understand? Hamsa, Tripti, Abhishek. Then 2300 is the actual payment and 2400 was the standard. If we are charging them extra, the benefit should also pass on to be passed on to them for the standard quantity only. So that is equal to negative 2,40,000. C. 600 is the actual rate and 500 is the standard rate. That means we paid sorry. यहाँ पे भी गलती की ना मैंने. I should have taken the rates in between. Sorry guys, this is wrong. By mistake. 700 minus 800. Okay, the answer is same. 2,40,000 here. And here it should be 3,900 I paid. I should have paid 4,000. So benefit to be passed on to them for 500 units. So 5 lakh. And D, 31,500 I paid, but we should have 50,000. Okay, sorry. I should have paid. System is stuck. You please continue. Minus 30,000 into 100. That is 1,50,000. Into 100. That is equal to 1,50,000. So overall for material, the accumulation claim is 290 gone, 50 gone, 1 lakh gone, 140 minus करना है. That would be 160. Right? Okay. B. Labor. Labor also same thing. L1 and L2. We should have paid. We paid 18. We should have paid 15. 3 rupees more we paid for 60,000 hours. 1,80,000. And we paid 35. We should have paid 30 on 40,000 hours. That is 80,000. No, 5 fours are 20. 2 lakh. So that is 3,80,000. So total escalation claim will be 5,40,000. Add initial contract price or contract price 1 crore 50 lakhs. So final contract price is 1 crore 55 lakh 40,000. Clear? Everyone? Okay. Last question. Sorry, last part of this matlab B part. Contract account. Particulars amount. Particulars and amount. Now, what comes in the contract account? Standard or actuals should be recorded? What should be recorded? Standard should be recorded or actuals should be recorded? Bolo? Actual. So, two materials account. A B, C, and D. Actual cost. I need the actual cost of all four here. That would be 3,400 into 1100. That is how much? 37 lakh 40,000. Next is 2,300 into 700. 16 lakh 10,000. 1 second. भैया सामान सामान ठीक है 600 into 3,900. 23 lakh 40,000. And 90 into 31500. 31,500. 28 lakh 35,000. Hamsa, please be ready with the labor this thing. 1 crore 5 lakh 1 crore 5 lakh 25,000. Hamsa, L1 and L2. 56,000 into 18. 56,000 into 18. How much? 10 lakh 8,000. 38,000 into 35. 13 lakh. Total 23 lakh 38,000. There was one more line written. Prepare the contract account if all the expenses other than material and labor related to the contract is 13 lakh 45,000. That means there is other costs also. 13 lakh 45,000. All the costs recorded. The contract is over by contractee's account. We hand it over to the contractee and take 1 crore 55 lakh 40,000 from him. So what is my profit? Should I write notional profit? Should I write notional profit? No. Why? Because this is the actual profit. The contract is over. So that is equal to
13 lakh 32,000.
13 lakh
32,000.
32,000. Did you understand? Third part, I will not be doing it. Third part is very easy, material variances and labor variances. Every detail is given to you. You don't have to even find out what is the uh, standard for actual. Standard is given to you, actuals are given to you straight away. You can do that question. Clear? Did you guys understand this? Any doubt that you have in this? No doubts? Sure? Okay. Let's go to the last question then. Last question of cost accounting that we are going to do, and of course, the last question of this chapter as well. Yes, we are going to do question number 19. Question number 19. Question number 19. I call these kind of questions as fill in the blank kind of questions. Why fill in the blanks? Because here they have given us the variances and the details from the table are pending. Understood? And again, I'm telling you, in case you get questions like this, please, please, please don't attempt. Means first you don't attempt. Later, of course, you should attempt it in case you get time. Clear? Can we read the question? Okay, let's start. ACE Limited operates a system of standard costing in respect of one of its product which is manufactured within a single cost center, and the following information is available. For 1 unit of product, standard material input is 20 liters. See, keep noting. They have given you the standard quantity 20 liters. Standard price 2 per liter. The standard wage rupees 6 per hour. Standard time 5 hours to produce 1 unit. Did you guys understand? Yes? Right? Okay. Fixed production overhead is absorbed at a rate of 100% of direct wage cost. This is for fixed overheads. During the month just ended, the following occurred. Actual price paid for the material purchased is rupees 1.95 per liter. Total direct wage cost was rupees 1,56,000. Fixed production overhead incurred was 1,58,000. Variances were as under: direct material price, direct material usage, direct labor rate, direct labor efficiency. All these variances are given to you. Fixed production overhead expenditure variance also given to you. Calculate the following for the month. Budgeted output in unit, actual output produced unit, number of liters purchased, number of liters consumed. That means purchased and consumed figures are different. Yes or no? When they have asked me purchased as well as consumed, that means purchased figures and consumed figures are different. Number of liters used above standard allowed. Actual wage rate per hour, number of hours saved, fixed overhead capacity, fixed overhead efficiency. Chalo, let's solve it. Now, when they have given you, 1 second, when they have given you that purchases and your consumption is different, it is always, you remember in your material variances, you have idle time variance. It is something like that, where the hours paid and hours worked are different. Similarly, under material purchased and material consumed is different. When they give you material purchased and material consumed different, your material price variance will be, what will be the formula? Can you tell me for material price variance? What is the formula for material price variance? Standard, bolo bolo bolo, price variance. Standard rate or standard price minus actual price into actual quantity purchased. Understood? Material usage variance. Tell me the formula. Minus actual quantity consumed into standard rate. This is the difference. Understood? Usage means consumption. Price we pay for purchases. And in this case, will your check work? Will your check work? No, it will not work because the quantities are different here. It will not work. Are you clear? Are you clear? Everyone? Abhishek? Tripti? Tripti? Not there. So, uh, where were we? So we cannot use usage variance. What else is there? Material price variance. What do you need in price? You need the actual rate that is there. Standard rate is there. So you can use the price variance. Working note 2. What will we get from this? We'll write later. Material price variance is equal to standard rate minus actual rate into actual quantity purchased. My system is stuck. 1 second. Actual quantity purchased. MPV is given to you as 8,000 favorable. So 8,000 is equal to standard rate 2, actual rate 1.95 into actual quantity purchased. So actual quantity purchased is equal to 1,60,000 liters. This I write here. So I'm going to write that with a different pen, 1,60,000 I got it from working note 2. You can't use usage variance as of now. So that means whatever details are pending from material variance, we can't fill up them. So we'll leave it as it is. And we'll go to the next variance, that is working note 3. Acha, what did we get from here? Calculation of actual quantity purchased. See guys, I knew what we'll get, but I'm showing you how you are going to attempt in this question in the exam. Okay, so quantity purchased we have got. We can't find out any other detail, so we'll leave it. Go ahead. Next is which variance? Which variance? Labor. We can't use that. We have two variables. We don't have the actual quantity consumed also. We don't have the standard quantity also. With two variables, you cannot use it. You are not going to get any answer out of it. Right? So, going ahead. Labor variances. Again, same table, standard hours, rate, amount. Actual hours, rate, amount. Standard for actual output. Hours, rate, and the amount. Labor variances. What all details are given to me? Given to us. Quickly, keep telling. There is no idle time, right? No idle time. Hours. What is the standard hours? Huh. 30 rupees. This is for the output of 1 unit. What else is given to us? Paid 1,56,000. Correct? No other details. This will also be 6 rupees. Now, going to working note 4. Let's see what will we get. Use any one detail. Labor rate variance. Standard rate, we have it. Actual rate, we don't have. Into actual hours. We don't have two details. But we have the actual hours into actual rate, that is 1,56,000. So we'll use that. Labor rate variance is equal to standard rate minus actual rate into actual hours. Break it. Open it up. Standard rate into actual hours plus minus actual rate into actual hours. LRV is given to you as negative 5760. So negative 5760 is equal to. Hello Anant. Standard rate 6. गुड इवनिंग अनंत. हम लोगों को 10 मिनट और लगेंगे. ठीक है, तुम रह भी सकते हो, मतलब हमको कोई प्रॉब्लम नहीं है, बट विल टेक 10 more minutes. Actual hours we don't have. Minus actual rate into actual hours कितना है? 1,56,000. So what is the actual hours? अनंत गए या हो? 25,040 hours. So this 25,040 will write it here. 25,040 या 25,400? 40. अच्छा अच्छा. 25,040 through working note 4. 25,040 years. So what we have got, working note 4 के ऊपर लिखो calculation of actual hours. Got it? Next, working note 5. I don't know what we'll get. Let's see. Labor efficiency variance. Rate we can find out. Right. Hmm. 6.23. Okay. Labor efficiency variance is equal to standard hours minus actual hours into the standard rate. LEV is given to us as 2760. So 2760 is equal to standard hours kitne? We don't know. Actual hours, yes, we know. Yeah, into standard rate of 6. So standard hours is equal to. Yes, standard hours is equal to 24,580 hours. पक्का है ना? 2760 divided by 6 plus 25040. श्योर हो? मुझे गलत लग रहा है. 2760 divided by 6, 460 plus, yeah, 25,500 hours. 25,500 hours. So I can write down this here. 25,500 hours I have got from working note 5. And multiply and tell me this also. One lakh 53,000. And this would be calculation of standard hours for actual output. Now tell me what detail is pending in labor? Is the output pending? How will you calculate the output? How will you calculate the output? Right. So if they are taking standard hours of 25,500, the standard will be for how many units? So if the output is 1 unit, the hours required is 5. So if 25,500 is the standard hours, the standard you have calculated for how many, what output? For 5,100 units. So this is 5,100 units. Working note 6. 5,100 units. अच्छा एक बात बताओ. Can I write here also 5,100 units? Can I write 5,100 units here also? Actual output is actual output, right? For labor, the actual output, and for material, actual output can't be different. Actual output is actual output, right? So can I write 5,100 and 5,100 here also? So tell me, what can I do now in material? Come back to material. Hamsa, right, we can find out the standard quantity. For 1 unit, 20 liters. So for 5,100, 1,02,000 liters at 2 rupees. That is 2,04,000. Ocha, you can complete this also. 1,60,000 into 1.95 amount. The purchase quantity is 1,60,000 and the rate is 1.95. 3,12,000. There is only one thing missing now. That is quantity consumed. Now what will you do? What will you do? Usage variance is pending, right? Yes or no? So we can use that to get the actual quantity consumed. Material usage variance is equal to standard quantity minus actual quantity consumed into standard rate. Usage variance given to you as 5,000 adverse. Standard quantity कितना है? 1,02,000 minus actual quantity consumed, we have to find out, into the standard rate of 2 rupees. What is the actual quantity consumed? $10,000 gone. Sorry, this is division 2,500 minus 2,500. So 1,04,500 liters. Correct? So 1,04,500 liters, working note 7. Can we now go back to the question? Go back to your question. Answer number 1. Budgeted output in units. Did we calculate that? No, ma'am, we are not able to calculate that. Point number 2. Actual output. What is your actual output? 5,100 units. Yes or no? Number of liters purchased. 1,60,000 liters. Yes or no? Consumed quickly. 1,04,500. Number of liters above standard used. 1,04,500 is what you have consumed. You should have consumed 1,02,000. So you have consumed 2,500 liters above excess. Yes. Actual wage rate. Quickly check. 6.23. Hours saved. Arre, 5, 6 actual hours worked. Sorry, this is 7. 6 Actual hours worked 25 40 hours. Okay, sorry, 40 hours. 7 is done. 8. Number of hours saved or excess. You were allowed 25,500 hours, but you took only 25,040 hours. So you saved 460 hours. Correct? 9 fixed overhead and 10 fixed overhead is pending. And the first one budgeted output is pending. Right? Now, working note 8. What have they given you? Have they given you the actual overheads? Have they given you the actual overheads? 1,58,000. Yes? What is your budgeted overheads? Budgeted overheads is budgeted output minus, sorry, budgeted output into absorption rate. Do you agree with me? Yes? They have given you fixed overhead expenditure variance. Fixed overhead expenditure variance is equal to what? Forget about it. You will have to go and check. Budgeted overheads minus actual overheads. Expenditure variance is given to you as 8,000 adverse. Minus 8,000 is equal to budgeted overhead minus actual overhead 1,58,000. So what is your budgeted overheads? 1,50,000. So coming to this formula, writing it again. Budgeted overheads is equal to budgeted output into absorption rate. So 1,50,000 is equal to budgeted output into what is the absorption rate? See, they have written fixed overhead is absorbed at 100% of direct wage cost, and the wage cost is rupees 30 per unit. Yes or no? Wage cost is rupees 30 per unit. Yes or no? Right? So, here also into 30, absorption rate is 30. So, what is my budgeted output? That is equal to 5,000 units. So, first part also done. So, working note number 8, calculation of budgeted output. 5,000 units. Now, lastly, they want efficiency and capacity variance, and for both of them, we need standard overheads. Working note 9, calculation of standard overheads. Divakar, how many hours did you work? Actually, how many hours did you work? As per the standard, one unit should have taken how many units? How many hours? So you would have done a standard production of these many units, right? And per unit you would have absorbed 30 rupees. So what is your standard overhead? 1,50,000 240. Lastly, you need fixed overhead. कौन सा variance है? Capacity variance. For the time being, I am telling you the formula. Absorbed overheads minus capacity, right? Sorry, efficiency का ये. Fixed overhead efficiency. First is efficiency. Absorbed overheads minus standard overheads. You have produced 5,100 units and on each one of that you have absorbed 30 rupees. Minus 1,50,000 240. फटाफट से बता दो. 2,760 favorably. Lastly, standard overheads minus budgeted overheads. That would be 1,50,000 240 minus budgeted is 1,50,000. That is 240 favorable. And with this, we are done.